S&P 500 now down 49.69. The 10-year Treasury down 5 basis points, down to 2.77 is the yield. The 30-year mortgage-backed security is down 3 basis points. That tells us interest rates are up ever so slightly, probably not even enough for you to see. And OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. Yesterday, the 30-year conforming loan locked at 5.637. The jumbo loan 30-year 5.022. 30-year FHA 5.35. USDA rural loan 5.454. And the best loan on the market for those who earned it are veterans. The 30-year VA loan at 5.238. But why? That's the question. Why is that happening? What's driving these rates? What's driving some of the bond market? Pressuring stocks are earnings from Walmart, which is the largest retailer and employs 1.6 million employees in the U.S., which is about 1% of the workforce. Walmart, which missed estimates and gave week forward guidance, Walmart said that surging food and energy prices are causing consumers to spend less in other areas. Does that surprise anybody?
Surprise, surprise, surprise.
They also had to lower prices to get rid of excess inventory. This could also cause some relief in inflation. Walmart is a good barometer for the consumer, and the way Walmart goes, so too does the economy. And speaking of the consumer confidence was reported at 95.7, a decline from 95.8, and the weakest since February of last year. Another recession indicator. The consumer is 70% of GDP. So when that number keeps dropping like it is, you can start making the assumption that there is not a lot of strength in the market. We're probably already in the recession. We'll know Thursday. The yield spread between the 10-year Treasury and 2-year Treasury is widened to negative 25 basis points, which is a deeper inversion than we saw in 2006, 2007 at 24 basis points, and the largest since September of 2000 when the Fed funds rate was at 6.5%.
Ow!
Expect this current inversion to grow after tomorrow where the Fed is likely to be hiking by 75 basis points. Looking to manufacturing, the Dallas Fed Manufacturing Index fell to a very weak negative 22.6 in July after a negative 17.7 reading in June. This comes on the heels of a negative 12 reading from the Philly Fed Manufacturing Index and shows that we are seeing recession-like conditions in manufacturing. In housing news, the National Case-Shiller Home Price Index, which is considered the gold standard for appreciation, showed home prices rose by 1.5% in May, 19.7% year over year, which is a slight decline from 20.6% in the previous report, but still blistering hot. Miami, 2.9% for the month up. Tampa, 2.8% up. Dallas, 2.6% up. Annually, Tampa's up 36.1%. Miami, 34. Dallas, 30.8. FHFA, the Federal Housing Finance Agency, released their house price index, which measures home price appreciation on single-family homes with conforming loan amounts. Prices rose 1.4% in May and are up 18.3 year over year, which is a slight decline from 18.7 in the previous report, but again, still very, very hot. These reports are for May, so they are still delayed 2 months, but are not showing any signs of appreciation slowing, as the monthly readings were still around 1.5%. You could argue that this is reflective of rates in April, and the full impact of higher rates is not factored in, and we'll likely continue to see these numbers moderate more meaningfully. I like the FHFA index because that's dealing with the conforming loans. It gets rid of some of the real outliers on the super high-priced properties. Let's see what else we've got in the new home sales. Measures signed contracts on new homes were down 8% in June to 590,000. Annualized pace was the lowest since last April. This was the apex of interest rates. The May report was revised sharply lower from 696,000 to 642,000. So when factoring in the revision, sales are down about 15% from the originally reported figures year over year. 457,000 homes for sale at the end of June, but only 41,000, or about 9%, are actually completed. Big number right there. So think about that. Only 9% of the numbers they're talking about are actually completed. The rest are either not started or under construction. The current pace of sales, there's a 9.3 month supply, but when factoring in the amount of completed homes, the month supply is really about 25 days. Median home price moved up lower by 9.5% last month, from 444,500 to 402, which is still up 7% year over year. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.